Before I begin to this video, let me give a quick disclaimer. I am not a financial advisor. The content of my videos represents my personal opinions and is provided for informational and entertainment purposes only. My information is not intended to be legal, financial, or an investment advice. Always conduct your own research and due diligence before making any financial decisions. Remember, it's your money. Please make informed decisions that are right for you. I'll never ask you for money, nor will I provide my phone number or personal email address. If you encounter any suspicious accounts or messages claiming to be me, please report them immediately as fake or scam accounts. Welcome back to Talk Stocks with me, where we turn market noise into clear signals leveraging technical data, both that exist in public domain and some that are custom built by myself. Let's begin this video by reviewing last week's market performance across major indexes. However, before I run through this table, let's go through some housekeeping. A bullish signal is labeled when the close price is above the 20 EMA, the plus DMI is above the minus DMI, and the ADX is at 20 or above. A bearish signal is when we have the close price below the 20 EMA, the minus DMI larger than the plus DMI, and the ADX 20 and above. When we cannot infer whether we have a bullish trend or a bearish trend, is labeled neutral. So that means when it's neither bullish nor bearish. WTD stands for week to date, YTD stands for year to date, PY stands for previous year. Whenever you see a star on asterisk, that means it is strong. So for instance, when you see a bullish with star, that's going to refer to I'm being strongly bullish about that stock. And whenever it's on a bearish label, that means I'm strongly bearish about the stock. Now let's begin a rundown of the table. We're going to begin with the US large cap stocks that is tracked with the ETF VOO. As you can see, this past week, VO delivered negative 0.71%. The short-term trend on the daily time frame is neutral, while the mid-term trend, established from the weekly chart, is neutral. Moving on to the Nasdaq, tracked by the ETF QQQ, this week posted a change of negative 2.17%. The short-term trend established from the daily time frame is neutral, and the mid-term trend inferred from the weekly chart is also neutral. The US small cap stocks, tracked by the performance of the ETF VTWO, this week posted a move of positive 0.48%. Year to date, VTWO is up positive 14.91%, exceeding last year's overall performance of 11.55%. The short-term trend on the daily time frame is neutral. However, the weekly or the mid-term trend inferred from the weekly time frame is bullish. Moving on to the Canadian equities, tracked by the ETF VCN, this week delivered positive 0.66%. Year to date, VCN has delivered positive 27.54%, also exceeding last year's overall performance of 22.16%. The short-term trend on the daily time frame is strongly bullish, while the mid-term trend established from the weekly chart is also strongly bullish. When I switch to the Nigerian markets, tracked by the NGX ASI, this week we saw a return of positive 1.62%. Year to date, ASI has delivered positive 45.18%, which outperforms last year's overall performance of 37.65%. Short-term trend on the daily chart is strongly bullish, as well as the mid-term trend on the weekly chart, which is also strongly bullish. When we move to oil commodity, which I track with the ETF USO, this week delivered negative 2.84%. Year to date, oil is down negative 8.92%. The short-term trend on the daily chart is neutral, while the mid-term trend on the weekly chart is also neutral. Bitcoin, tracked by the ETF GBTC, this week posted negative 1.22%. Year to date, Bitcoin is down negative 4.65%. This dwarfs last year's overall performance of 113.81%. The short-term trend on the daily time frame is bearish, as well as the mid-term trend on the weekly chart, which is also bearish. When we look at world equities, which I tracked by the ETF VT, this week posted negative 0.39%. The short-term trend on the daily time frame is neutral, and the mid-term trend on the weekly time frame is also neutral. Lastly, gold commodity, which I track with the ETF GLD, this week delivered positive 2.18%. Year to date, GLD has delivered a gigantic return of 63.32%, which dwarfs last year's 26.66%. The short-term trend on the daily time frame is bullish, and the midterm trend on the weekly chart is also strongly bullish. In this section of the new format, we're going to be looking across different markets, specifically the NGX ASI as well as the US market, for opportunities. Let's begin by looking beneath the hood of the NGX. This is what I call NGX market internals going into this week. So I'll just run through the most important segment that I think we need to understand. When we look at the NGX ASI, we have roughly between 140 to 143 stocks in the markets is when I've started tracking. These measures here are ways I'm able to track the health of the market. So let's run through them quickly. How many stocks from the 143 stocks within the ASI are trading above their 50-day moving average? The week that just ended, 36% of stocks are trading above their respective 50-day SMA, which is a 10 percentage point change compared to the previous week. And I score this as red because this is less than 50%. If we look at how many stocks are trading above their 200-day moving average this week that just ended, we had 71% of stocks trading above their 200-day moving average, which shows strength in the foundation. The previous week was 67%, bringing the change this week to 4 percentage points, which I score as green, which is strong. When I look at how many stocks within that ASI are actually moving, are advancing, this week was 56% of stocks that I could see that were advancing compared to last week's 58%, which is roughly flat or negative by 2 percentage points, which is, basically noise. And I scored this as yellow, which is neutral. Now, when you want to look at from the basket of stock within the ASI, how many are on a strong stage 2 uptrend, meaning where are the stocks that are actually moving, that if you want to trade, you look for opportunities there. We see that this week that just ended, there were 26% of the stocks that were actually moving, where you could actually have taken trades and be profitable, compared to 19% last week, which is a big change of 7 percentage points. I still scored this as weak because this is actually a small segment of stocks within the basket. Now, going into this week, if you are looking for opportunity, where does value lie? The great thing is that the NGX ASI is actually advancing, which is not only just advancing, it is in a strong advancing phase, which is good for that the overall market be moving. There's a famous saying which I typically, identify to, which is that a rising tide floats all boats, as well as the NGX 30 is also, you can see it in a strong advancing state. The consumer goods sector is one sector that is advancing. So when you look at the basket of stocks within there, you are going to see opportunities for short-term trading. Now, every other sector like industrial, oil and gas, banking and insurance, they are either advancing or declining. I don't want to go into breaking them down in this video, but yeah, definitely I have access to tell which are actually declining, and that means there may lie opportunity for investing if you're a long-term investor. But if you are a trader looking for stocks where buyers control the price action, you want to focus on the consumer goods going into this week. Thank you for your time going through the NGX market internals. I hope you find it useful. This is a new addition to the format. Please drop a message in the comments if you like this section that I've recently added. I believe it's going to bring value to the community and for you to look for opportunities. How I will go about it is that I will be looking for the strongest stocks within the consumer goods sector. However way you are able to identify that is how you look for opportunities. I've created my own way where I'm able to identify the strongest sectors and also the strongest stocks outperforming the sector at which they belong to. So let's switch to the US market and find where opportunities may lie. In this section, we'll be looking for opportunities in the US market. What I have on the screen here are, especially on my left, if you look at my left, are what sectors are showing strong short-term momentum. So the first important information here is that how do I define short term? Again, the definition of traders A short term will be different from trader B's short term, will be different from trader C's short term, depending on the time frame of your interest. Based on my own time frame of interest, The financial, the industrial, consumer discretionary, technology, and material sectors are showing strength in the short term. How I go about it is that I can either trade the sector, which I define as the strong sectors, and my strategy for that is hot sectors. Remember, once I've been able to identify the sector, remember, if I look at the S&P 500, there are 11 sectors. This first filtration step is to find the sectors that are strong in the short term. It doesn't mean I go and buy all of them. As a technical analyst, I also have an entry rule that is purely systematic. So going into the week, until my rule is met, I would not take any position. So I need my entry rule to also be met before I take a position in one of my strong sectors via an ETF. The other way I can trade this is by looking for the strongest stocks in the strongest sector. Remember, say if you look, for example, financials, which I have in this table here, some of the hot stocks within that sector include APO, K, KKR, JKH, AIG, SYF. I remember all these are based on S&P 500 stocks. So again, I don't trade the small cap stocks. I don't look for opportunities there. I focus on the S&P 500 because data shows me with S&P 500 stocks, at least I'm stacking probability on my side. Now, what you can see from me here, this second column here, are my own custom scoring mechanism of how I'm able to identify the hottest, stocks. Similarly, I rank my ETS with a similar type of score. And you can see that this month, and we're just on the 14th of December, APO has delivered 13.72%. The S&P 500 year to date has done maybe 16.7%, right? And you can see how hot this type of stock is. Just this month is up 13.72. Key, the second on the list here, has done 12.65%. So the whole idea of how I look for opportunities, that can I find a hottest sector in the time frame I'm trying to trade, which is in the short term, right? Can I look for an entry in one of these sectors, or perhaps the top sector? So rather than me even trading all the sectors, I can only focus on the top one or the top two, right? And wait for my entry criteria to be met. Then I take a trade, or I look for the hot stocks within that hot sector. Once my entry again is met, I take a trade. This is how I look for opportunities in the US market, and every week I'll show you what sectors are hot, and we'll look for at least the potential list of which stocks are hot within such sectors. So take a look at this. This is not financial advice, but these are some of the hot stocks that you can look to take position for going into this week. So looking at the markets this week, we see a mix of caution and optimism. US large caps and Nasdaq remain neutral in both the short term and mid term, while US small caps show a bullish mid term trend, signaling some growth potential. Canada and markets in Nigeria are showing strong bullish momentum, both short and mid term, which is encouraging. Oil and world stocks are holding steady with neutral trends. Bitcoin remains under pressure with a bearish outlook, and gold continues to shine with bullish momentum. Now, what's the takeaway from this week's video? Clearly, we see some markets are treading water, and opportunities still exist in regions and assets showing strength. I'll tell you to keep a close eye on the bullish markets, manage risk where sentiment is uncertain, and remember, patience and timing are key in navigating this type of mixed landscape. Stay informed, stay prepared, and trade smart. Thanks for tuning in. If you found this new format helpful and you like it, please drop a like in today's video, hit that subscribe button, and share your comments in the comment section. I'll see you next week. Until then, trade smart.